Well, fears about sharp tax increases and government spending cuts didn't put off shoppers in the US in December, as retail sales rose 0.5% from November. Today I'm speaking to Jon Copestake, Chief Retail and Consumer Goods Analyst at the Economist Intelligence Unit in London, to discuss the reasons behind this growth. Jon, thank you for joining me. Analysts have been warning for months now that the US economy is weakening. Do these results today prove these fears to be wrong?
I think the US economy, the fact that the US came into a bad patch in 2011, but in late 2012 it has actually been strengthening. And whilst I wouldn't say it's in a super healthy, robust state, it's certainly like seeing quarter-on-quarter growth. So I would say that regardless of whether it's 0.5% retail sales growth or 0.4% retail sales growth, especially now that the fiscal cliff question has sort of been answered as well, I would say that things are certainly much more forward-looking on the up rather than on down.
December was a difficult month for the US, as it was burdened by the anxiety and uncertainty of fiscal cliff debates. How much of an impact did this burden have on retail?
Yeah, certainly now. I mean, I think, it's certainly the fiscal cliff was certainly a factor that weighed upon Christmas spending in the US, and although we did see this growth, it possibly would have been slightly stronger if people hadn't been so uncertain. But equally, I mean, in the early part of December, around the time of Black Friday and Cyber Monday, the US spending was actually fairly strong, and spending growth year on year, especially online, was fairly strong at that period. So I think the early part of the month certainly growth there may have bolstered the overall monthly results, and perhaps now that whole question is slightly out of the way and an agreement has been reached of sorts, then moving forward, consumers may have a little bit more confidence.
The manufacturing and services sector showed signs of growth last month, and payrolls continue to grow at the end of 2012 too. Do you expect this trend to continue in these first few months of 2013?
Yeah, I mean, don't expect them to decline, but certainly, I mean, there's obviously going to be some fiscal tightening, and that would mean that there might be a slowdown in growth, although it doesn't mean that growth will still be sustained. In a sense, the markets have to sort of understand that these standoffs between President and Congress in terms of passing legislation happen, and so that might mean that they become more inured to them and more resistant. So as a result, they don't cut jobs, etc. As a result of things like the potential fiscal cliff, re-emerging. So there are other factors as well. I mean, export prospects are picking up. The fact that China is seen as a growth economy once more, and other emerging markets are also sort of stepping up. So I think that you might see that there will certainly be a continued growth, but that growth may slow down.
And looking at retail sales specifically, what are your predictions for this year?
We're forecasting fairly steady growth, actually. We're seeing that sales will continue to go on an upward trend, unlike the Eurozone. The US does seem to have put much of the financial crisis behind it. So there's definitely a little bit more optimism over the next 12 months. On the consumer price index, we're looking at growth to match that of 2012. I think in 2012 it was about 2.1% inflation, and in 2013 we're looking at probably about 2.4%.
And finally, video game sales saw a 22% decline in the US in December. Is this due to popularity or reluctance of consumers to spend?
I think there's a structural change taking place in the video games market. I mean, the 22% decline to start off with. I mean, the video games market tends to revolve around certain releases, so there'll always be spikes when there's a big game released, and there'll always be troughs when there isn't a big game released. And I think that's a partial reflection in those figures. In 2012, December, that there were no real big releases, whereas in 2011 we saw Assassin's Creed Revelations release, which is obviously a big sort of ticket game, and a console game as well, console and PC game as well, which means that it sells for a lot more money. But I think the structural change that's taking place is that people are using consoles and much less, and so the hardware gaming industry is definitely declining, and people are becoming they're downloading iOS games or Android games and games onto their phones or onto their Androids or onto their tablets. And I think that is what is causing sort of a general decline in terms of revenue made in the gaming industry, because people buy these games much more cheaply, they're much more disposable. If you even just look at the game launches actually over the last 12 months between December 2011 and 2012, it's incredible to see that in December 2012 all of the big games that were launched, most of them were on these smartphone platforms as applications, whereas in 2011 there were a lot more platform console games launched as well.
Thank you, Jon, for those insights. I will be back tomorrow with a look at South African economic growth. For all the latest headlines, just click back to the Dukes Copy website.